Sierra C in Saisha has sold out yet again, driving a 9-week high in sales. Will other developers step up with new launches? Let's find out. Hi, I'm Bobo and welcome back to our weekly recap of Hong Kong real estate. This week, we're reviewing the long weekend's first-hand market performance, as well as a mystery big spender who purchased 29 brand new units last year for 226 million Hong Kong dollars, before we end with a recap of the secondary market. Over the long weekend, strong demand for new launches drove 406 first-hand transactions. Saturday and Sunday alone saw 375 deals, up 3.6% from the previous week, marking the highest level in 9 weeks. 296 transactions came from Sierra C, accounting for over 75% of the total. During the second round of sales on Saturday, all 288 units released on the price list were sold out. On Sunday, an additional 8 special units were sold via tender. One notable transaction involved Unit C on the 33rd floor of Block 5 of 997 square feet, with a 276 square foot terrace and a 764 square foot rooftop. This unit sold for 20.2 million Hong Kong dollars at around 20,200 Hong Kong dollars per square foot, setting a new price per square foot record for the project. This strong demand has given developers the confidence to raise prices. Sierra C has now released its 6th price list, featuring 110 units with an average discounted price of 12,038 Hong Kong dollars per square foot, 3.4% higher than the previous price list. Discounted unit prices range from 3.35 million Hong Kong dollars to 9.14 million dollars, from around 10,700 to 13,100 dollars per square foot. A comparison of units on the new and previous price lists highlights the price increase. For example, Unit A on the 5th floor of Block 1, measuring 702 square feet, is priced at 10 million Hong Kong dollars. This is 2.6% higher than a similar unit on the 5th price list, located 1 floor below and priced at 9.75 million Hong Kong dollars. Additionally, the developer has revised pricing for the first 3 price lists, raising the prices of 18 units by 1.5%. The third round of sales is scheduled to take place today, with 128 units offered on the price list and 22 units available via tender. Aside from Sierra C, other new projects also saw solid demand over the long weekend. In Tuen Mun, Mori sold 11 units, while Twin Victoria in Kai Tak recorded 7 transactions and KT Marina sold 4 units. Recent strong sales in the first-hand property market have also helped stimulate buyer interest in the secondary market. According to Hong Kong's 4 major property agencies, the city's top 10 blue-chip housing estates recorded 14 secondary transactions over the weekend, the highest in 21 weeks. However, the secondary market remains in a state of volume without value, with prices remaining stagnant. Semi-new properties in particular are still the hardest hit, with many seeing significant losses during resale. One notable example is a high-floor unit, Flat F in Block 1A at Vibe Central in Kai Tak. The original owner bought the flat 8 years ago during its initial launch in the primary market, but recently sold it at a loss of nearly 2.5 million Hong Kong dollars. The unit, of around 515 square feet with a 2-bedroom layout, was sold for 10.38 million Hong Kong dollars, or 20,155 dollars per square foot. This marks a 20% decline from the original purchase price of 12.87 million dollars in 2017. Meanwhile, last year's easing of property cooling measures spurred a wave of bulk purchases in the primary property market, driven by big spenders. However, some of these buyers are now offloading their properties at heavy losses less than a year after purchase. One mystery buyer, reportedly with a mainland Chinese background, spent around 226 million Hong Kong dollars last year to acquire 29 units across 3 new developments. Among these, 27 units have recently been listed for sale at a loss-making total price of around 159 million Hong Kong dollars, about $42.01 million lower than their original purchase price. In April and October last year, the buyers spent a total of nearly $226 million to acquire 6 units each at the Grands in To Kwa Wan and the Grand Marine in Tsing Yi, as well as 17 units at Manor Hill in Tseung Kwan O. Save for 1 special unit at the Grands and 1 4-bedroom unit at the Grand Marine that were withheld from sale, the remaining 27 units were recently put on the market, and all asking prices for these units are below their original purchase prices. Despite being prepared to sell at a loss, market insiders say that the asking prices are still above current market levels, making it difficult to secure buyers. For example, FLATS C10, a high-floor unit in Block 2 at Manor Hill of 288 square feet, was purchased in October of 2022 for 5.532 million Hong Kong dollars. The current asking price is $4.45 million, which would result in a paper loss of $1.08 million after just 6 months of ownership. However, property agents note that recent secondary transactions in Manor Hill have seen prices as low as $13,900 per square foot, while the aforementioned mystery buyer is listing units at 15,451 to 17,668 Hong Kong dollars per square foot, still higher than market levels. According to these figures, unless the buyer reduces prices by an additional 5% to 8%, it's unlikely that these units will sell in the short term. At the Grand Marine, some units are estimated to face losses of up to 30%. For instance, a 4-bedroom high-floor unit in Block 2 of 808 square feet is listed at 11 million Hong Kong dollars, $5.1 million below its purchase price of 16.1 million Hong Kong dollars. Under the current environment, with no cooling measures and an absence of strong catalysts, the secondary market continues to face downward pressure. Home prices have fallen to their lowest levels in 8.5 years, and homes purchased either years ago or through short-term speculation are not immune to losses. The latest statistics show that the profitability ratio for secondary market resales has dropped to 63%, the lowest in 16 years. In the first quarter, 3,317 transactions involving private residential properties generated a profit, representing a quarterly drop of 2%. This marks the 7th consecutive quarter of decline, with the profitability ratio now at its lowest since quarter 1 of 2009, when it stood at 59.9%. The average profit margin per transaction also fell from 20.4% in the fourth quarter of 2022 to 19.9% in quarter 1 of 2023, marking a 0.5% decline and the 7th consecutive quarterly drop. Meanwhile, the number of loss-making transactions rose to 1,882, accounting for 36% of total transactions, a 2% quarterly increase. According to Derek Chan, head of research at Rika Corp, the property market has yet to see improvements emerge in the second quarter. The ongoing trade war and competitive pricing in the first-hand market have further eroded demand for second-hand homes, leaving sellers in a weaker position. As a result, the profitability ratio in the secondary market is expected to further decline, potentially dropping by another 1.4% to settle at 62% in the near future. For more information on the second-hand market, stay till the end of this video for this week's recap of second-hand transactions across each district. That's all for this episode. See you in the next.